Tata Motors recently released its fourth quarter results of fiscal year 24 and it is making headlines. But despite strong financials, Tata Motors today witnessed its share slide almost 8% on some concerns. Let's discuss this. But before we decode the reasons of the decline, let's get an overview of the Tata Motors and the recently announced Q4 results. To start off, Tata Motors is a leading global automobile manufacturer and part of the illustrious multinational conglomerate, the Tata Group. They boast of being India's market leader in commercial vehicles and among the top 3 in passenger vehicles market. Currently, they have a product portfolio offering commercial vehicles comprising trucks and buses, followed by passenger vehicles, luxury vehicles, which is a Jaguar Land Rover business, and the recently forayed into electric vehicles. Apart from these, they also operate in the vehicle financing business referred to as Tata Motors Finance. But did you know a major chunk of revenue, about 69% of the revenues, comes from the luxury segment, which is the Jaguar Land Rover business. Second comes in the commercial vehicle segment with 17.9%, followed by passenger vehicles at 12%. At 0.8% comes the vehicle financing segment, and lastly others at 0.4%, which basically includes the IT services and insurance broking services. An interesting point to note is that on 4th March 2024, Tata Motors announced plans to demerge its business into 2 separate listed companies. The commercial vehicles business will be one entity, while the passenger vehicles, the electric vehicles, and JLR, which is Jaguar Land Rover, would be another part of the entity. This would approximately take 12 to 15 months to complete, subject to necessary approvals from shareholders, creditors, and regulators. Now moving on to the fourth quarter results. Tata Motors reported revenues from operations of around 1.2 lakh crore, an increase of 13.3% from the same period last year. For the full fiscal year 24, it recorded revenues of 4.37 lakh crore, an impressive 26% increase from fiscal year 23. This is attributed to volumes or units improving as the JLR ramped up production, followed by healthy demand in India. The pricing, bigger product portfolio in terms of new variants improved the average selling price, leading to higher revenue growth. The fourth quarter also witnessed healthy margins for EBITDA at 14.9% and EBIT margins of 9.1%, which came in better as compared to all the other quarters. Now coming to the bottom line, Tata Motors witnessed a threefold jump in its consolidated net profit to 17,528 crores. This is an impressive 219% increase year on year. Even for fiscal year 24, the profit recorded was 31,800 crores, growing over 1,000%, reaching its highest profit recorded till date. All 3 business segments, PV, CV, and JLR, witnessed strong profits as margins improved on better realizations, mix, and cost savings. Even the electric vehicle segment grew in terms of volumes at 47.5% year-on-year growth for fiscal year 24. With the increase in EV adoption and charging infrastructure, the EV could be in line to deliver better numbers. Another important point to note is that Tata Motors' net auto debt has reduced to 16,000 crores, which is a considerable decrease from the previous 2 years. In fact, Tata Motors India business now turned debt-free and witnessed net cash to the tune of 1,000 crores. Furthermore, Tata Motors as a whole expects to turn net automotive debt-free in fiscal year 25. This means the automotive business, including JLR, will become net debt-free. All in all, they did have a solid fourth quarter and fiscal year 24, as you can see on the screen, recording highest ever revenue, EBITDA levels, free cash flows, dividend payouts, etc. But despite the strong financials, the share prices declined more than 8% today. Let's understand why. Firstly, Tata Motors' number might appear impressive on the face of it, but several brokerages like Goldman Sachs, Nuvama, and few others have downgraded the stock's rating, thereby leading to the decline. The collective sentiment around this that Tata Motors could witness a moderate growth in fiscal year 25, especially in commercial vehicles. Moreover, the company itself expressed cautious optimism with expectations of a weaker H1 in the domestic markets. Tata Motors management also expects higher marketing spends going forward to drive JLR's order book. And also for fiscal year 25, the EBIT margin is expected to be flattish. The strong financial performance is a positive sign, but future growth concerns and cautious guidance dampened investor sentiment. In a nutshell, while it's evident that Tata Motors has demonstrated a remarkably strong performance across its segments during the fiscal year of 24, there are some headwinds ahead that are likely to hurt its performance. The coming months will be crucial to see how Tata Motors navigates potential headwinds and capitalizes on its strength, particularly in EVs. Having said that, this is me, Ralison, signing off. Have a great day and stay safe.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com